In introducing managerial accounting, we talked about the cost-benefit analysis. And the way the cost-benefit analysis begins is by a critical look at what is called the value chain. And again, unlike financial accounting, uh, the value chain is not something that is defined in any accounting standard. Instead, it is unique to the individual entity. So we're going to talk in generalities. This chart is Exhibit 1.1 of your textbook. And the components of the value chain are listed here on the left. We have our three preliminary activities: research and development, design. These activities begin the product life, and we look at a an idea or a product or a service, and we develop that. And once we have decided that this project is a go, we then need to put together our production, and we will go out and we will purchase raw material. We will hire labor. We'll train that labor. We'll purchase equipment. We'll build out our production facility or our service facility. Once we've done these preliminary steps, we'll be going into production to actually produce the goods or services. And then we have to do our selling, which will deal with marketing, advertising, uh, customer contact, and uh, the activities of our salespeople. And once we sell the product, we have to get the goods and services to the customer, and then we need to follow up with the customer service. Each of these components will incur costs, and the value chain allows us to assess the cost of a component versus the benefit that it's going to provide us in the future. So again, this neat little chart shows an example of the types of activities that are associated with each component and gives you a little bit of an example that you can see how these components are implemented, what type of costs we're likely to incur. The primary focus of cost accounting is to track these and allow management to go back and assess the cost of each component with the benefit that it's going to give in the future. So when we talk about a value chain, these are the general components. Of course, the individual makeup of a company will affect these components. In some industries, such as pharmaceuticals, research and development is much more important than the actual design of the, say, the pill that you're going to put out, what colors the pill are going to be. In others, it's the design that tends to be more important than the research and development on the product. So when we talk about a value chain, we're talking about these components and these types of costs. And of course, we need to capture these costs in a way that allow management to make decisions about the activities of the business.